Good evening, everyone. And my name is Vakar Khan, and I'm the Equity Research Analyst at William O'Neill India. And I welcome you all to this week's Market Wrap. Without taking up much time, let's start with Nifty 50's chart analysis for the week. Last week, we had downgraded the market status to downtrend as distribution day count on Nifty had got elevated to 8, and Nifty had breached all its key moving averages. Nifty declined on all trading sessions of the week and declined 4% during the week on a consecutive basis. As the market is in downtrend, we were seeking market to establish a potential bottom in order to shift the market status to rally attempt. For market status to be shifted to rally attempt, market has to stay above the lows established for 3 consecutive sessions. On Monday, Nifty made a new low of 16,142 but ended the session in top half of the trading session. Hence, according to William O'Neill's rules, we counted Monday as day 1. And on Tuesday, Nifty declined by 0.4% but did not breach Monday's lows. Hence, Tuesday got recorded as day 2 of the rally attempt. On Wednesday, a third day of rally attempt was not established as Nifty breached its earlier lows that it had created on Monday. On Thursday, Nifty had a windfall movement as it declined from the word go, tracking weakness in the global market indices and declined nearly 2.2% by the end of the day and established a new low of 15,735. At the end of Thursday, Nifty was trading 7% and 8.4% below its 50 DMA and 200 DMA respectively. On Friday, started the session on a strong footing but succumbed to selling pressure during latter half of the day and ended the day 0.2% lower. However, on Friday, Nifty did not breach its Thursday's low of 15,735. Hence, we count it as day 1 of rally attempt. Now, let's discuss how global market indices are placed at the moment to understand the broader picture in detail. If we look at the 4 weeks back for the developed markets, 16 markets were in confirmed uptrend, 5 markets in uptrend under pressure, and 3 in rally attempt, and no markets were in downtrend. However, in a week's time, from the 16 markets in confirmed uptrend, only 4 markets remain in confirmed uptrend, and the count of uptrend under pressure increased to 14 from 5. Similarly, as we entered the month of May, no developed market was in uptrend. Out of the 14 markets in under pressure, 9 were remaining and 10 went into downtrend, and 5 were in rally attempt. Taking into account till yesterday's action, then only 1 developed market is under pressure and 15 markets are in downtrend and 8 are searching for a follow-through day as they are in rally attempt. Now talking about the emerging market indices. A few weeks back, 10 markets were in confirmed uptrend and 9 were in under pressure and only 3 were in downtrend. But as the times passed by, markets continued to come under pressure as during the start of May, the count of markets in confirmed uptrend got reduced to 6 and markets in downtrend increased to 7. In just a week's time, this downtrend in markets increased from 7 to 13. So the sell-off in Indian equities is facing is not limited to just domestic equities alone, and global indices, including developed and emerging market indices, are under the pump at the moment. Inflation has been increasing across the globe, and US and India released the recent inflation data. So let's see what the data points are telling us. US CPI inflation rose at an annual pace of 8.3% in April, which was more than the consensus estimate and staying at a 4-decade high, underscoring US Fed's push to stamp out inflation. Although it was lower than March record number of 8.5%, but still remained at elevated levels. Shelter, food, airline fares, and new vehicles were the largest contributors to CPI last month. However, weakness in energy prices contained the overall inflation as gasoline index in US weakened by 6.1% month on month. US stocks retreated, led by sell-off in tech and Nasdaq trading 3.2% and S&P 500 trading 1.6% when the inflation data was announced. India inflation has also joined the bandwagon as April inflation of 7.8% was much higher than the estimates of 7.5%, which came in at a 8-year high. The headline inflation is at a highest level since it hit 8.3% in May 2014. Retail inflation has now remained above RBI's 6% upper tolerance band for 4 consecutive months. Meanwhile, the sharp spike in inflation in April explains RBI out-of-turn rate hike of 40 BPS in May. Expectations are building up for possible rate hike of 25 bps in the June meeting and a total of 75 to 100 bps hike in the FY23 considering the inflationary scenario. Now let's talk about the outlook. As the inflation across the globe continues to remain elevated on account of steep commodity prices, logistic problem pertaining has led to global central bankers, including RBI, hiking interest rates and squeezing off excess liquidity in the system to control the inflationary scenario. In these times, Nifty chart becomes even more important to help us gauge a direction through these turbulent times. Market continues to remain in downtrend with day one of the attempted rally on Friday. We'll need two more consecutive sessions to take the market to rally attempt and a follow through day that is an up move of 1.5% or higher on volumes higher than the previous day to take the markets to confirm uptrend. On the flip side, if market reaches the recent lows, then market will move back to downtrend. Thank you guys, and now is the time to take a break and enjoy the weekend. Hope you found this week's market wrap informative and stay safe and stay healthy.